Welcome to FOMO Consulting for your daily AMC stock analysis video on Thursday, June 10th. Run, Hedgie, run. And we are about to start another bull run in the next day or two, I firmly believe. And as always, the apes are winning, the diamond handlers are winning, and most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I appreciate your support. Let's get into the video. Thank you as always for everyone who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you. So let's start with a quote from my father. I would rather see a sermon than hear one. And I know my brother and I heard this a million times. Essentially, in the relevance to today and this movement. There's a lot of people that say they are diamond hand. There are a lot of people who claim to be all in, and I believe most personally, but not everyone is, and nor do they have to be. There are a lot of people in this play for different reasons, right? Not everyone can afford to be diamond hand, and that's okay. But being a diamond hand doesn't have to be vocalized every 3 minutes. You just live it, right? You just live it. So as always, I have skin in the game, and I am bleeding today, just like you. And I believe showing this, credibility in this community with all the FUD and all the crazy things going on, I believe is absolutely key. I have no problem sharing this bloodbath with you, as painful as it is, but I believe in the bigger picture. So let's look at the overall market. I think today was a fantastic day. The Dow was up 19 points, NASDAQ up 108 points, S&P up 19 points. Tech had a great day. The CPI data came out this morning, jobs report. Everything was just really, really good. Wall Street seems to be in a good place regarding inflation and the fears. Although it trickled up just a little bit, it certainly stayed within reason, and the jobs data stayed close to expectation. So that was a huge catalyst for the overall market. That was not how AMC, GME, and others performed, however. So let's look. Crypto, at the time of this recording anyway, is down, and down pretty good. I mean, overall, 3-5%. Not a good time. It's just been a big sell-off day in a lot of these quote unquote retail investor holdings, right? The Germans held strong. Well done, German apes. I know you took a beating today, just like the rest of us. You are diamond hands all the way. Thank you for all you're doing. Obviously, shareholder information, the shareholder count came out yesterday evening. There's been a million videos on it, a lot of people breaking down the numbers and what they mean. You do your own due diligence, but I think we can all agree that the numbers lead us all to the belief that there are more shares owned than actually exist. So let's look how AMC did today. Overall, big sell-off at the opening bell. I think we had hopes today might be a decent day. We were recovering from pre-market, and you could clearly tell they were trying to hold it back, not let it run. They had plans, so certainly they had a big sell-off that affected many stocks. But we did find consolidation around that 44, 43 level for pretty much the second half of the trading day. Overall, I think it shows a lot of strength, and I think, again, we are set up beautifully over the coming days. So again, Wall Street bets stocks head south as GameStop plunges amid SEC probe. We'll get into that shortly. Stock sale news. However, S&P closes at record high as long-term inflation fears abate. That is very bullish for us, short, mid, and long term. That the overall market, we are a stock connected to the overall market, right? To the Russell, to the NASDAQ. I mean, there's just a lot of ETFs. So as the overall market goes, generally we go. So let's look at AMC yet again on the 15-minute time frame. Not too terribly bad. We are, I believe, in an oversold scenario. We are primed for a recovery. The alligator's mouth, at least on the 15-minute chart, is open in a bearish direction. However, the RSI has been reset back and ready for a bullish run, and as well as the MACD on the 15-minute time frame. Let's look at the 1-minute time frame for GME today. This is GME. Sold off from the opening bell, drug us down, drug a lot of other stocks down. Obviously, the SEC probe. There was FUD around 5 million share at the market offering. True, false, we don't know yet, as far as I know anyway. But overall, just a lot of fears around GME, even after they had exceptionally positive earnings, and congratulations to them. But of course, our opponent took every opportunity to cause mass panic, right? 5 million shares dilution. We've lived it several times now, right? So let's look at costs. Costs, exact same chart as AMC. Go figure. Tanger, same thing. Major sell-off, consolidation second half of the day. BlackBerry, sell-off, a little bit more ragged, but same overall pattern. And IWM ETF, which houses a lot of these stocks, but most importantly AMC and GME, quite heavily, and we'll get into that very, very shortly. And everyone's favorite, Clove. So let's look at AMC on the 1-hour chart. You can see the alligator's mouth is now open in a bearish direction, but that is okay. We've certainly been pressed down over the last few days. If you look at the RSI, we are now in somewhat of an overbought perspective. I believe we are very poised for a bullish bounce and a bullish recovery very, very soon. If you look back before the big run up, you can see we are at pretty much the exact same level. And the MACD is in a bullish area in an oversold perspective, and I believe it is ready for a bullish MACD crossover on the 1-hour anyway in a short period of time. Let's look at it on the daily chart. Again, alligator's mouth wide open. We've had a couple red days, no big deal. RSI is now back in the channel, which is a good thing. We are set again for another bullish run, and MACD is clearly in bullish territory. I usually don't recommend a lot of YouTubers, but this guy I personally like, and I think he's phenomenal. He put out this video, I believe it's Saturday, Sunday. Look him up, Andrew with Trading Sciences. He's big into the Elliott wave theory. His perspective, his forecast, his analysis has been pretty much spot on. Based on his analysis, we were due for a retracement to around $35 before it bounced to $135. I would give this video a look if you possibly could. Again, he is very, very good at his technical analysis. So I'm sure some of you have seen this, been on Twitter, StockTwits, what have you. A young person, I believe, named Emily, on a Twitter thread, the Emily account, going back and forth. Then again, do your own due diligence. This may or may not be factual and accurate, but shortly after she posted the string of messages, the account was deleted. If you look over to the far left, proof, she writes it down, Citadel Securities, face mask, take it for what it's worth, and I'm sure everyone has saw the dark pool, the real dark pool price for AMC at $1,533. Again, do your own due diligence, believe what you want to believe, but it's certainly weird times in the AMC stock world, right? This is one thing that is exceptionally bullish, although it caused a lot of the craziness today. Charles Gasparino tweets, legal sources say recent GME filings suggest SEC enforcement is launching a broader inquiry into possible manipulation of meme stocks. That is very much what caused the sell-off, I believe, this morning and throughout the day. This is why the hedges are running, among other things. And this man deserves all the credit in the world. He has come to our rescue in the mainstream media. Charles Payne has been an absolute godsend, and he is certainly supported by this community. Losses for Melvin Capital and Light Street Capital total about $6 billion since the start of May. Stupid is as stupid does. So another piece of news, Wall Street bets stock heads south as GameStop plunges amid SEC probe stock sale news. Feel free to pause this, but overall, as we touched on, there is FUD around a 5 million share offering at the market offering, same as AMC did, and also the SEC probe looking into GME as well as other meme stocks. So of course, hedgies are running. That's a good thing. So let's look at AMC in the short data trend lines. As you can see now, it's bouncing back up. You can see the borrowed share volume has picked up. We know that they are trying to suppress us and hold us back, and the Ortex data was somewhat flawed, right? We've all heard it. So this is today's Ortex data. The exchange reported short interest 102 million. It has gone up. Percent of free float on the loan is actually down, at least on this. Shares on loan 84 million. I believe that's flawed. Days to cover a little less than 1 day. Again, that's due to the heavy volume over the last couple of weeks. Cost to borrow has gone down, no doubt because they have been returning any unborrowed or unused short position shares. But there was a borrow change today of 3.3 million. They borrowed 4.7 and returned 8, but they certainly used, even on SSR, every possible share and every possible opportunity they could to short AMC. Fintel shows 1.8 million shares available. Fee is 2.48. Total volume of 221 million today, which was much higher than yesterday, and that's a good thing. Keep the volume up. No doubt there was a lot of selling pressure, synthetic and otherwise. Believe what you want to believe with that. So here is IWM. This is the ETF that holds the most shares of AMC, but also holds GME and many other stocks. You can look at the short interest trend lines, but you also look at the exchange reported short interest of 130 million shares. So again, just to show you that the Russell iShares Russell 2000 exchange has a heavy weighting of 0.82 for AMC, while GameStop is 0.56% weighting, third largest holding. So the duo were the top two holdings, making up 1.53% and 1% of the fund respectively. So what you see at the top is today's AMC Ortex data versus IWM ETF that has AMC, GameStop, and others. So you can certainly see the shorting is much heavier even on the ETF, which only has 299 million shares outstanding. There's no free float because it's an ETF. So that would equate with the short interest of 43%. So let's look at the options data for today. Obviously, there's going to be a fight somewhere, I believe, between 40 and 50. Depends on how we run. But you can certainly see the battle lines have been drawn. You can look on the right for the puts and the calls on the left, and I believe 44, 45 is in play, possibly 50 if we break a good run tomorrow, and 40 to the downside would be the battle zone. So again, we'll see how this plays out. Historically, Fridays have not been our best days, lower volume, but something seems to be going on in the background. We may have a fantastic Friday for all we know, right? And this is why I believe I'm most bullish. If you look at the total, the call to put ratio, 1.3 to 1, it's becoming a little bit more neutral. And if you look And again, I'm not an options expert, so take this with a huge grain of salt. I am not a financial advisor, nor is this financial advice. But look at the 3 yellow arrows. You have June 11th expiration for these trades that occurred today for $70 and $65 strike price that are mostly puts, standalone puts. Now that you've got the one, a $70 strike and a $70 put, quantity of 10,000 contracts, huge amount of money. But if you look down the chain, you'll see where there's a lot of standalone puts at a very high strike price. Again, there could be something up, folks. I don't know the smart money. Maybe this is just hedging, but it certainly seems to be very, very odd that these were purchased today for June 11th at a $70 strike for a put. It just seems odd. And this is actually very bullish as well. Yesterday, the probability on the bottom right was down in the 30s. We are back up above 60, even on a horrible red day. Don't know why. Maybe smarter money knows better than us, but $1,100 per share. Maybe this is right all along, right? So overall, again, it's fun to look at. Take it with a grain of salt. So let's close with a quote, and I believe, and I love this guy, Jim Valvano, former basketball coach of NC State, back in the early 80s, passed away in the early 90s due to cancer. Before he passed away, he gave a fantastic speech. Please watch it sometime on YouTube, Jim Valvano. But a quote from the speech says, "If you laugh, you think, and you cry, that's a full day. That's a heck of a day. You do that 7 days a week, and you're going to have something special." Jim Valvano. I think we all, with AMC stock and going through all of the ups and downs, we laugh. We certainly cry. Today was a cry day. And we think a lot, right? A lot of due diligence, a lot of perspective, a lot of due diligence. So we've had a lot of really full days, right? So if you find this video informative and entertaining, please like, share, certainly comment, and subscribe. But as always, thank you for watching, and I hope your life is full of green candles. We'll talk to you soon.